You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? It's Mike from The Moose and the Loose. I hope you're doing well on this Tuesday. Just came back from a week of vacation. That was amazing. We went in the French island in Martinique, and seriously, like, everything was great. Reminded me a lot of Costa Rica, actually, so I really enjoyed myself. That was nice, fully energized, but oh my God, we got so many news during that week on the stock market, isn't it, right? So I'm a bit late on that, but I'm going to do a quick tour on Telus and Bell earnings. Not to describe them because, I mean, you read the news, you followed your stocks. I'm pretty sure that you're pretty much aware of what happened last week, but I want to tell you a little bit more about what to do with Telus and what to do with Bell, because like there are two giant wireless companies, but one is doing good and the other one is digging its grave. So I'm just going to put more emphasis on that. So we're just going to do a quick tour of the earnings, and then I'm going to tell you what I will do with my position with Telus and what would I do with Bell. So Telus, actually, that was pretty good news. I've been telling you for the past 2 years at least to follow cash flow metrics. So we're talking about operating cash flow, free cash flow, and CapEx. The CapEx is the capital expenditure. It's the amount of money that the company is investing / spending, depending on where you see it, to build a better business. So the investment in like 5G technologies, for example, in case of Telus, they're also investing into Telus Agriculture, Telus Healthcare, Telus Digital. So all of those things, like massive investment, like we're talking about billions every year. Telcos are like this. It's just like a game of spending a lot of money, generating cash flow, and hopefully the cash flow is going to be a lot better than whatever they invest. So when you follow those metrics, and I've been on the fence in 24 saying, yeah, Telus better show better results every single quarters for those metrics. They delivered. And then in Q1, this is what they did again. So operating cash flow was up 13%. The free cash flow was up 22%. And the capital expenditure was down 19%. So they started to slow down their investment and starting to cash on previous investment. That was the whole thesis. That was the whole game that management kept on telling us. Yeah, we are borrowing more money. The debt is increasing, but we're going to generate a lot more cash flow down the road. This is what they said they would do. This is what they're doing right now. So it has been a tough road, and it's not one yet. It's just getting better, but at least those numbers made me smile. The other thing that made me smile, and I told you last time when they reported their Q4, is Telus did not say anything back then about their dividend growth policy. So they had that dividend growth target of roughly 7 to 10% up to 2025. So now we're in 2025. What's going to happen? Well, good news, my friend. The dividend was increased by another 3.5% this time. And they have a target. So they extended their dividend growth policy, but now the target is 3 to 8% through between 2026 and 2028. So 3 to 8%, it's of course less than it was before. The situation is different. The competition in the wireless industry is really tough. Telus is actually kind of like part of the winners on that part. We're going to talk about Bell in a second, but Bell is actually finding this a little bit like rougher for Telus. The revenue was up 3% for the quarter, and then T.TO, which is like mostly their wireless and wireline business, the most important one, roughly like 90% of the business almost, the revenue was up 2%. So it's not great, but I mean, those are like mammoth, right? They're not moving fast, so you don't expect them to grow super fast, but that was like fast enough for me. So that was good. Telus Healthcare, actually, revenue rose by 12%. It's now a business generating almost $500 million, so almost $500 million per quarter in revenue. Telus Digital revenue was up 4%, generating almost $1 billion this time. So we can see that there are some growth vectors. We can see that it's getting better. So going forward, I still have my shares of Telus. I'm going to treat Telus more like a deluxe bond. So not expecting much from the stock price growth, but as long as the dividend will be increased, and this is what's supposed to happen for the next 3 years still, I'm just going to follow the same cash flow metrics. But so far, I'm relatively happy with what happened. Of course, it doesn't it doesn't compensate for the bad performance Telus had over the past 3-4 years now. Definitely not a big winner in my portfolio. I've been holding it for a very long time, so the dividend is kind of like compensating. But yeah, so far not incredibly happy, but it's enough for me to keep it. Now, let's talk about the elephant in the room, Bell slashing its dividend by 56%. And then investors will be saying, hey, Mike, but that was good news. The stock price was up more than 5% on earnings day. So that's amazing. Yeah, well, the stock price is also down about 50% over the past 4 years. So I'm not too sure if it was really good news, or it's usually what happens when a company finally announced the dividend cut. They're just saying, yeah, now it's one step towards the right direction, if I may. As you can remember, I have downgraded BCE a while ago at DSR, actually twice. So warning and kept on raising those flags that BCE is not doing that great. Revenue struggling. In this quarter, revenue was down 1.3%. The cash flow metrics weren't that bad though. But the problem is, it's been so long, and the company has improvised so much that now we're in the situation where the interest charges are way too high. The company has to invest massively in Ziply. Well, big surprise, because they want to do the acquisition. So what they did, because the lack of cash flow, is first they cut the dividend, and the second thing is they announced a partnership, selling a portion of Ziply to PSP, a pension plan from Ontario that will invest with them to grow Ziply Fiber in the US. So Bell will keep the original Ziply in their books, but the kind of the new corporation that will grow will be split 51% for PSP and then 49% for Bell. So that shows that yes, they are still struggling with cash flow. It's still going to be very hard, and that is another another red flag. I mean, I like to see that they're finally finding a way to generate some growth, because we've been waiting for that for a long time, but yet they will not participate fully in that growth. They need a partner. So again, not really convinced. And if we go back for a second, I just want to make the genesis of that dividend cut. So everything was going well while interest rates were low. The company was borrowing more money. Everything was fine because they were reinvesting and telling the same narrative. We're borrowing right now, massively investing. We're generating a ton of cash flow. Everything's going to be fine. Then 2022 happened. Interest rates started to rise, putting pressure on Bell. Bell is having a lot of problem with competitors, struggles to grow. We're talking about small 2-3% revenue growth, but very difficult. The cash flow is not flowing, so it's getting hard. So eventually the company goes through a restructuring program. They lay off 9% of their employees. They're trying to look at other ways to reduce CapEx, and then 23 not going that great, and then 24 towards the end, BC announced, we're going to sell our stake in MLSC, and then we're going to use that proceeds to pay off debt. So I thought, well, that could be a way out. At least they are not growing, but at least they are generating good cash flow with this, paying all the debts, strengthening the balance sheet. Kind of makes sense. 7 weeks later, big improvisation here. They're just oh yeah, well, that was a joke. We're not going to pay off our debts. We're actually going to borrow even more money and buy Ziply Fiber. All right, so that's a growth opportunity that didn't exist 7 weeks later. Really? Not too sure, right? In the same breath, they announced that they will freeze the dividend in 2025. I was raising the flag for a while back then, but then that time it was just oh my God, announced the dividend cut already, and that's going to happen. Well, that's what happened roughly 6 months later in May of 2025. Last week, actually, the dividend was slashed. And then there was the partnership with PSP Investments. That kind of like it one step forward towards the right direction. The problem I have here is the management that didn't enroll its balance sheet, that made a lot of improvisation, that kind of like told you we're going to pay off debt and then, we're not going to pay off debt in the same sentence almost. It's still in place. So do you trust them? That would be my question for you. So yes, I know maybe you're a shareholder, you've lost a lot of money, and then you see that glimpse of hopes that yes, Bell went up by a big fat 5%, but that's pretty much it, right? I mean, I'm not overly impressed with that, obviously. And will it continue? Well, to continue, the company must generate stronger cash flow. That's the only thing. And if you look year to date, the stock is still down about 2%, including the dividend. And the market is up about 3.7% right now. So there's kind of like a 5, almost 6% difference between Bell and the overall TSX 60 index. So what to do now? I mean, I would have sold a while ago. I got rid of BCE in our DSR portfolios like more than a year ago. But unfortunately, it is what it is, right? So now my trick for you would be, all right, so let's say you have invested $20,000. Now it's down to $10,000. What you're going to do with that? Because this is what's left. So either you think that your $10,000 is better invested in BCE as of today, or you're taking that $10,000 and you're putting it into your next best idea. I'm not here to tell you what to do, but this is how you should frame your decision. I have $10,000 today. Should I invest in Bell or should I invest in any other company? Maybe the answer is I'm going to keep it with Bell because I don't see anything else interesting on the market. That's fine with me. But this is how I would approach this dilemma. So I don't care what was my investment was worth 5 years ago. Today, I have that money. Should I keep it in this company or not? So, all right, Moose, 12 minutes already. So I'm going to shut up right now. I'm going to let you go with your day. I hope that you have enjoyed this one. If you did, go on YouTube. Tell me in the comment, what are you going to do with Telus or Bell? I'm going to see you in the comment. And tomorrow morning, we're going to come back with another show. Until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy this show and do your due diligence after it.